In the next few weeks or next few quarters, next few months, we'll learn what the repercussions will be. But I think the rise and the rally for gold will have legs. It won't stop here. If you look at average gold rallies in the last 50 years, you can expect $5,000 gold within 18 months, just based on the average rallies we've seen in the past.
Yeah.
And I think it's quite clear that gold is back as an essential part of the monetary system. And even the president of the Dutch Central Bank, he said in a national television interview last year, we need gold to, stabilize the system when things go wrong.
Gold's upward momentum continues strengthening, supported by technical and fundamental factors. Willem Middelkoop, founder and CIO of the Commodities Discovery Fund, highlights that gold's bullish trajectory remains intact. Historical patterns suggest a potential rise to $5,000 per ounce within the next 18 months. This projection aligns with previous market cycles, reinforcing expectations of continued price appreciation. Many commodity analysts anticipate sustained support for gold as deglobalization trends accelerate. President Donald Trump's tariff policies have encouraged emerging market nations to reduce their reliance on the US dollar, increasing their demand for gold as a strategic reserve asset. This shift is evident in central bank activity, where gold purchases have surged among emerging economies seeking greater financial independence. According to a recent report by the World Gold Council, emerging market central banks remain at the forefront of net gold acquisitions. Uzbekistan's central bank led the way in January, increasing its official reserves by 8 tons. China, a major player in the global gold market, also expanded its reserves by 5 tons, marking the third consecutive month of purchases following a 6-month pause last year. Currently, gold comprises just 6% of China's total foreign reserves, a figure many analysts argue is still relatively low if China aims to strengthen the yuan as a global reserve currency and challenge the dominance of the US dollar. Other nations are increasing their gold holdings. The National Bank of Poland and the Reserve Bank of India each acquired 3 tons, the Czech National Bank added 2 tons, and the Qatar Central Bank bought 1 ton. These purchases underscore gold's growing role as a hedge against economic uncertainty and currency devaluation. Middelkoop notes that persistent demand and tightening supply indicate gold's rally has room to grow. Additionally, institutional investors, traditionally cautious about gold, are now entering the market, further strengthening the bullish outlook for gold as a preferred safe haven asset. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
It has been spinned. This is all about tariffs, but I think that's only the spin. I think there's something much larger at stake.
Okay.
Nobody knows. We've been researching this. We've been talking to a lot of experts. Nobody knows exactly why there's this huge move from physical gold from London to the US. We know there's this call to open up Fort Knox and have some transparency there. I've been writing about that for 20 years. An audit is long overdue. The last audit was over 50 years ago.
Yeah.
It could be connected to that one, but what we do know is that central banks in over 25 countries are fleeing towards physical gold. We've seen record demand by central banks for 3 years in a row. I think let's concentrate on what we know, let's concentrate on the larger trends, and then see where we go from there. But I was at Eric Sprott's keynote this morning. Eric Sprott said if they'll open up Fort Knox, some eyes will really go wide open. So he's expecting some news coming from that front. I warned Elon Musk that it's not enough to have a visual inspection, because you know about the gold-plated tungsten. You can have bars same size, same weight. So you need to really analyze them well.
Yeah.
And I'm quite sure that tricks have been played by the US because gold is just too important. The dollar was backed by gold till 71. Since 71, the dollar is unbacked by gold. So there's every reason for the US to play games in the world of their physical gold holdings, because these contracts are T+1, which means delivery should be done the next day, and now it's T+60 or 90.
Yeah.
So that's a technical default, and I don't think that situation will go away. So in the next few weeks or next few quarters, next few months, we'll learn what the repercussions will be. But I think the rise and the rally for gold will have legs. It won't stop here. If you look at average gold rallies in the last 50 years, you can expect $5,000 gold within 18 months, just based on the average rallies we've seen in the past.
Yeah.
Once the high net worth guys, the family officers, see that the central bankers who can create money and they have the license to print money are fleeing towards gold. They start to get a bit nervous. And don't forget, you have these institutional investors who never invest in gold unless there's a smell of war in the air. Well, you have that as well. So I think the demand for gold will stay very strong. And if you look at the paper gold system, the paper silver system, I just wrote a piece for the London-based think tank, monetary think tank UMVIF, that for every physical ounce which is in the vault in London, there are 270 paper claims on that 1 ounce of physical silver. So we could see some really big moves.
We've been hearing this supply crunch for a while. We've always been talking about the silver supply and demand issue potentially. This crunch, is this the most it's been? I mean, is it?
This is the most serious it has been in 50 years.
Yeah.
And this could be the big one. This could lead to the big one. And now the US is getting creative to, let's say, refinance their balance sheet. They want to monetize their assets. They want to start building a Bitcoin reserve. It shows you this administration is willing to think outside the box. They feel the need to do something creative because the road we were walking on and we were kicking the can down the road for so long, it's a dead-end street, and they do understand that.
What happens if gold's revalued?
There are two scenarios. You could revalue it at current prices. This will benefit the US because the US is the only country which still has the gold on its balance sheet for the $42 per ounce. So this will help the US and not their enemies. You could revalue gold much higher, let's say to $10,000, but then it's also very beneficial to China and Russia. So I think that's not of the interest. That's not the road the US wants to go. It shows gold is coming back into the system.
Yeah.
The US tried to convince us that gold is just a commodity. After taking the dollar off the gold standard, the US have been working very hard to convince, especially central banks around the world, that gold is just a commodity. You better sell it. You don't need it as a national reserve. After the collapse of Lehman in 2008, this mood changed in the world. And I think it's quite clear that gold is back as an essential part of the monetary system. And even the president of the Dutch Central Bank, he said in a national television interview last year, we need gold to, stabilize the system when things go wrong.
As global trade tensions escalate, Europe finds itself reevaluating its economic alliances. The recent tariffs former U.S. President Donald Trump imposed on key Western allies in February have strained relations between the U.S. and Europe. Some European leaders have expressed dissatisfaction in response, while others seek to diversify their trade partnerships. Amid these tensions, China is capitalizing on the situation by extending diplomatic and economic ties with European nations. However, Europe's approach to China remains complex. While some countries are exploring deeper economic relations with the BRICS member, others are shifting their focus toward alternative partnerships with Japan and South Korea. Additionally, many European nations are increasingly looking to India for trade and procurement, further highlighting a shift in global economic alignments. The growing divide between the US and Europe is not only driven by trade disputes but also by differing perspectives on the Ukraine war, adding another layer of complexity to their relationship. Despite these developments, maintaining a close relationship with China presents challenges for Europe. The country's strategic goal of dominating the global financial sector has raised concerns about the long-term implications for Western economies. As the geopolitical landscape shifts, the US must work to preserve its alliances with Europe to prevent further fragmentation. Willem Middelkoop has emphasized the broader movement from a dollar-centric financial system toward a multipolar economic order. This transition has gained traction, with policymakers, including U.S. Senator Marco Rubio, acknowledging the need for a more balanced global structure. Let's get back to the interview.
I just had a panel in which I talked for 1 hour on the de-dollarization and the need for monetary reset. And I'm even more interested in what's happening in the US. It's actually a situation where you're near civil war. You have Elon Musk saying that we are broke, we need to cut the budgets. Mm-hmm. He came in with an axe and a chainsaw. It's the way he changed Twitter. He sent away 80% of the staff at Twitter. You can do that with a private company. If you do that with the government, there's a risk you destabilize the system. So I'm getting a bit worried. You know, you have a new administration. It's the second time Trump is president. It's totally different from the first time. The first time, Trump was surprised he won the elections. He didn't have his team ready. He has a very alternative team now. I think he's very well prepared, and they have a plan. Just read what a guy like Pete Hegseth, the new Secretary of Defense, has been writing in his book. Just listen to what the new chief of the FBI has been saying in interviews. They want transparency, they want to open it all up. It reminds me actually on Gorbachev in the 1980s, who brought glasnost, but he brought down the system as well in the USSR. No, I think markets are, as you know, very overvalued, the US market. So actually it's a bubble in search of a needle. This could well be the needle which will lead to a huge correction because stocks, especially tech stocks, are so overvalued. If you look at Nasdaq is down year to date 2%. Our fund is up 10%. You see the resources, the gold funds are doing pretty well this year, but you see like some sector rotation ongoing, and I'm afraid that we'll have more destabilization, more chaos, and the situation, political situation in the US is such. It's so weird. It's so strange. It looks like a Hollywood movie. In the session I just had on de-dollarization and the need for monetary reset, I pointed to the 80-year cycle. You have The Fourth Turning, the famous book by Neil Howe, that every 80 years you see like a change in leadership. You see like big changes coming to to society. And actually now, this year, 2025, is 80 years past 1945, the end of the Second World War. So we are in this period of change, and change, it might bring chaos and crisis. If we're unlucky, it might bring a large war. I hope we don't end up there. But this list is showing there's so much chaos in the world. Yeah. There's so many risks, and now you have the US really destabilizing the world a bit more, right. even destabilizing it a bit more. Well, I think it's part of this 80-year reset, and which I described in my book, The Big Reset, that we needed to have changes. I focused on the international monetary system, so we needed to go from a unipolar world centered around the dollar to a multipolar world. And now even Rubio, the new Marco Rubio, he even said that we need to move away, that the US is the leader of this free world. So he pointed to the multipolar world, which is happening as we speak. So everybody has to adjust. We in Europe are quite shocked that we even are in, let's say, a fight with the US. We need to find our own foreign policy. We need to build our own defenses. So it's a crazy world out there.
As economic landscapes shift and global trade realignments accelerate, gold continues to gain traction as a key asset for financial security. Rising demand from central banks and institutional investors and ongoing geopolitical tensions reinforce gold's long-term strength. Meanwhile, trade disputes and shifting alliances are reshaping global markets, prompting nations to reassess their economic strategies. With these factors in play, gold's role as a hedge against uncertainty remains more relevant than ever. Will growing economic realignments and trade tensions push gold to new highs, or will market forces slow its ascent? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.